Okay, good afternoon everyone, and welcome to this first parallel session on Decarbonizing Finance. So my name is Timothy Jolin, and I will be moderating this panel. I work at Amundi, so a large European asset manager, and 2 years ago we partnered with the UNEP FI to launch an interesting, quite innovative initiative called the Portfolio Decarbonization Coalition. And so Remco and Lisa from UNEP FI asked me to say a few words as an introduction to this panel on the work we've been doing with the portfolio decarbonization together. Hopefully, this will help us to set the stage on this broad trend that we call decarbonizing finance. So I would like to maybe reflect on two things on the PDC. First, PDC achievements, because we are quite proud of the journey that was ours in the past 2 years. But second, and maybe more importantly, the sort of help that we received throughout this journey. And by help, I mean how this success was part of a much broader trend and agenda on mobilizing finance. So the Portfolio Decarbonization Coalition was created in September 2014 to answer Secretary General Ban Ki-moon's call to show leadership by non-state actors in the run-up to Lima and the COP21. And in the summer of 2014, UNEP FI approached us and other institutions because they were looking for leaders in the institutional investor space and in the finance community as a whole. And so we worked quite a lot to build a case that mobilizing investors was something meaningful and that could have a material impact. And so this project was selected, and the co-founder UNEP FI, Amundi, CDP, the Carbon Disclosure Project, and Swedish pension fund AP4 went on stage in New York in September 2014. They took what appeared to us at the time quite a very bold commitment. It was to gather $100 billion of commitment to decarbonize assets by investors. And so we had 18 months, basically, to gather this 100 billions. And so we did some workshops in New York with investors from the US, in Bellagio in Italy with the Rockefeller Foundation in Roma. And the idea was to share experience and knowledge between investors that were already taking action to take into account their carbon risk exposure, willing to take action, or contemplating to take action. And thanks to this sharing of knowledge, we were very proud to announce during the COP21 that the PDC reached more than $600 billion of commitment, gathering 25 investors that represented about $3.2 trillion. So $3.2 trillion, you can guess that within these 25 investors, you must have very large, major financial institution. So Allianz is one of these institutions, of course, but we had large French investors from the Nordic, from Australia, from the UK. So this was PDC achievement. And the second point is I would like to reflect upon is the fact that the world has changed as the PDC was growing in commitment and asset. Since 2014, we have had prominent central bankers siding with the PDC. He probably didn't know the PDC, but he had a tremendous impact on the investor community. We have had US President Obama expressing himself on transition risk and a carbon bubble. A former US Secretary of the Treasury, Martin Wolf, very well-known sell-side analyst. And so major investment across the world before the COP and since the COP have taken billion-plus commitment to decarbonize part of their portfolio, integrate carbon transition risk into their investment strategy. And of course, this happened outside the PDC, and we have an example here today with ASN Bank and AXA. But it happened also in the US with New York State Retirement Fund and CalPERS. What happened also as a key factor was regulation, targeting investors. This happened in France in 2014, but it's an ongoing process. And I think we all think about what's going on in China that can be a game changer. Last but not least, green finance is progressing as a new topic at a very fast pace under the impulse of the G20 that was in China and that will be taken by Germany next year. So the topic of the day is about decarbonizing finance. And to discuss here this topic, we have a very distinguished panel with two representatives of the top performing, largest insurance companies, but also best ranked companies in terms of climate risk integration. So we have Carsten Loeffler, MD of Allianz Climate Solution. Allianz Climate Solution is the center of competence for climate change and renewable energy. As such, Carsten is responsible for integrating climate change considerations into the Allianz core business. Christian Tiemann, Global Head of Strategy, Sustainability and Public Affairs at AXA Group. So Professor Tiemann is also Vice Chair of the FSB Task Force on Climate-Related Financial Disclosure. And maybe he will give us a hint about the future report about to be issued in the coming month, and also professor at the Paris School of Economics. Christian previously worked for the ECB and the IMF, and of course, you may be able to reflect on the current trend around the central bank's willingness to engage financial actors. We have also the head of sustainability in one of the most sustainable banks in the world, Pete Sprengers. Pete is also, I'm talking about ASN Bank. Pete is also former director of VBDO, the Dutch Association for Investors for Sustainable Development. And he now oversees ASN Bank and ASN Investment Fund sustainability policies and research. Last but not least, on my left, Catherine Howard, Chief Executive of Share Action since 2008, named Rising Star of Corporate Governance by Yale University Milstein Center. So my understanding, and Catherine will tell us more about that, Catherine engages institutional investor community on responsible investment, transparency, and good governance. Catherine's organization, Share Action, also undertakes shareholder activism to promote corporate policy change on a range of social and environmental topics. So maybe to start this panel, and we want it to be as inclusive as can be and lively if possible, we will start by a brief introduction from each of our panelists on what it means decarbonizing finance for their respective institution and for the different fora they're part of. Pete, you start with ASN? Thank you.
Yes, thanks very much. I took the freedom to show you some slides of the work we've been doing. As ASN Bank, we have long been pondering about our role as bank in the 2 degrees goal that was already reaffirmed in Paris last year. As we have been working on decarbonization actually for some decades as ASN Bank, and for example in 2007, that's actually quite recent, so in our view, we started carbon footprinting all our equities. We did this with the help of Truecost. We were the first in the Netherlands to do so. So we built up quite some experience, but in 2012 we thought we are not doing enough. We want to take this step further. So we decided we wanted to carbon footprint all our investments. So you're not talking about our operations, but of our total balance sheet. Because we thought if we could succeed in carbon footprinting all our investments on our balance sheet, we would have an idea what to do, what our actual role would be in helping to achieve the 2 degree goal from Paris. So we started, maybe if we can have the first slide. So we started with carbon footprinting every individual asset on our balance sheet. And what we saw was, of course, that there are investments which only have carbon emissions, but there are also investments which have avoided carbon emissions. The last one, of course, are mostly sustainable energy projects. Now, if you have calculated for every investment your carbon footprint, you can build a carbon profit and loss, which you see over here. So you can see all the investments with carbon emissions on one side and carbon losses on the other side. We'll go back this one. And all the avoided emissions on the other side. And now we thought, okay, if we, it jumps back again, if we can calculate our avoided emissions against our carbon emissions, we can also set a goal. And that goal would help us define the role we have as a bank in helping to achieve the 2-degree goal. This goal is we want to achieve carbon neutrality in 2030. So all our investments should be net carbon neutral in 2030, which will mean that the avoided emissions equal the emissions on our balance sheet. Which actually, if you translate it to energy, in one hand, on our balance sheet, the energy use of all the investments equals the sustainable energy production on the other hand of the balance sheet. So this helps us defining how far we should go in our role as a bank in decarbonizing on the side of losses and also in decarbonizing in the side of avoided emissions. Now, at this moment, we have been calculating this since 2012. We are at 70% of our 100% goal. So 70% of our total investments are now carbon neutral. We still have to go 30%. That's quite an achievement, we think. Mainly because we do not invest in the fossil fuel energy at all. But of course, this is not the end. Actually, for us, this is the beginning. We hope that other financial institutions will also start carbon footprinting their investments. We succeeded in challenging our parent company. ASM Bank is for the Dutch market a middle-sized bank with 13 billion euro assets under management, but our mother company, SNS Bank, has 63 billion euros under management, and they also decided to follow our example and become carbon neutral with all their investments in 2030. Now, to conclude, we hope with this initiative will stimulate other financial institutions as well, and actually it did. What you see over here is that we, this is the Secretary of State for the Environment, Mrs. Dijksma, in the Netherlands, which receives a pledge of 10 financial institutions in the Netherlands, pension funds, banks, and insurance, which have adopted our initiative to discuss carbon footprinting by financials, so not for financials, but by financials, and developing a methodology which they can all use and is similar in its approach. And now, at this moment, this working group, which is called PCAF, Platform Carbon Accounting Financials, has been already working for a year on developing and improving this methodology. And in the end, if you want to know anything about the methodology, However, we are a Dutch bank, so much of our internet site is in Dutch, but over here you will find the information in English as well, also on the methodology, and I'm welcome to answer any questions you have on it. Thanks so much.
You can ask questions in both Dutch and English, so hopefully we'll have some answer before the end. Christian, could you tell us a few words about what AXA is doing as a large institutional investors in the field of decarbonizing finance?
Yes, thank you very much, with pleasure. I mean, our journey on climate really accelerated a couple of months before the COP, because there we were sitting in Paris and quite close to the government and seeing how all the international community was heating up, and we were asking ourselves what we can contribute. And then came the idea to disinvest from coal. And it was not an easy decision because, of course, these are assets that provide some return. It was the first time that one would think on both sides of the balance sheet to disinvest. Don't we have a responsibility to our clients? Can we forgo this return? Where's really the industry heading? And in the end, we came to the decision that it was the right thing to do. So AXA was the first one of the large global insurance companies to disinvest from coal. And it was a decision that was very, very positively received, because for the first time, the insurance sector was seen as acting both on the liability side and on the asset side. And this was really the remarkable impact. We did, however, not want to send a negative message only, so we said if we disinvest from something, we have to invest into something else. And so we said we balance this with a commitment to triple our investment in green infrastructure over the next couple of years. And then the disinvestment from coal was made, and we are now building up on the commitment to invest in green infrastructure. On this one, we find it difficult to find the right projects. That is a real issue. We don't see a stream, at least not in Europe, of really interesting green infrastructure projects which have a return, which are fit for private investor and so on, but we stick to our commitment. And then we went through the usual review of the whole balance sheet, the whole portfolio. We are prepared the carbon footprint of the portfolio, which we are monitoring. And then in France, the government came up with an article that is best known for its number, 173, which is an article that obliges all institutional investors to explain how their portfolio is in line with the carbon trajectory that is being planned. And the minister, Ségolène Royal, the Minister of the Environment, and she has put out a competition, and we are now running up in this competition in order to prove that we are able to document in which way the portfolio is in line with a broader decarbonization strategy. So I would say these are the big picture where we stand. And then, of course, on the product side, we are trying to help more and more clients, corporate, SMEs, individuals, to find solutions to protect against climate risk. We're investing a lot in our internal models to better understand climate risks in terms of all the various shapes this can take. And then finally, we engaged on the Bloomberg task force, about which I can say a word later on.
Thank you very much, Christian. Not AXA, but Allianz is also a leader in climate finance. Karsten?
Yeah, thank you, Timothy, and building on what Christian just mentioned. See, I can make it easy for me. We did the same. We just followed. A little differently in the end, but the basic concept with respect to coal divestment, see, that's pretty similar. A bit of a different cutoff we took here. And with respect to investing in green, for us it's mostly investing in renewable energy installations. So we have been doing this for now over a decade, so that was nothing new. But there's a commitment to ever increase these investments as projects come our way that are sufficiently attractive. So we are back to your point, Christian. Projects, at least for institutional investors like us, seem to be kind of a scarce animal. But in that respect, to complement the picture, we joined the Portfolio Decarbonization Coalition, and we announced this at the same time as the COP21 took place in Paris. So we used this venue in order to have a signaling effect and to showcase that we mean it very seriously. Looking forward and kind of seeing what happened in the last month, then it's very much about climate is one, but we tend to approach our portfolio strategy more holistically, meaning environmental, social, corporate governance issues are all important in their own rights, and we try to integrate this and bring it together with the carbon and climate agenda. So in that respect, we currently are looking at our entire portfolio and are going to find a way. That takes time, of course, because it's quite a large portfolio and we have to do it prudently. How to integrate these environmental, social, corporate governance criteria on the one hand side, and making the portfolio more climate resilient over time. So that's a very brief overview.
Thank you very much, Christian. Catherine?
Sure. Well, I guess one thing that probably unites everyone at the conference is a sort of assumption that we're not going to achieve the ambitions that we set in Paris collectively as a world community unless we successfully mobilize the financial services industry. And I think we probably also all agree that we need to help the industry to do that. I mean, the financial services industry is embedded in society and it's governed by regulators and policymakers. Sometimes some people argue over-regulated perhaps, but nevertheless, there's this, I think, need to support, enable, encourage the financial services industry, especially the pension fund industry, to make this journey, which we need made if we're going to succeed. So what we've started to see is some very impressive action from above. And I think the Dubai Declaration today is actually a really good example of action from above, and also the China guidelines that came out in September from the G20 process are another extremely impressive kind of policy-led, from above, enabling mechanism that really helps to see the finance sector play its role. But there's actually also some very interesting action from below. And my organization, Share Action, is involved in supporting, educating, and enabling pension savers who ultimately hold the assets or have them held on their behalf that form an awful lot of the global invested assets to challenge their fiduciaries to accelerate the transition and the portfolio decarbonization project and process. So in the UK, and I think this is a problem that's very, very relevant in many other countries, but I'll speak from a bit of a UK perspective because that's where I'm mostly doing this work. We have a lot of, we're the second largest country in terms of private pension assets in the world after the USA. So the contribution, the role of our pension industry is pretty relevant at a global level. And we have very high carbon pension funds that are highly invested in sort of indices, stock market indices that are pretty heavily weighted to high carbon incumbent industries. And that presents our pension savers with a double risk. It presents them with a financial risk, obviously, of being overexposed to the potential for stranded assets, overexposed to industries that really face very significant challenge in the transition. And it also presents non-financial risks. I mean, I, as a pension saver, and many other people feel the same, you probably do in the audience as well, would like to see this transition succeed. And so I want to see my pension assets deployed in that way so that not just on the financial risk, but as a citizen, as someone bringing up a family, you know, I'm not going to be in a world that's ravaged by climate change. And we are uncovering an amazing set of people who are bringing this case to the trustees of pension schemes, to these senior executives, and they really are accelerating a thought process that, you know, ought to be underway, is already underway in the leading funds, but where, quite honestly, there's still a lot of room for progress in a big, big part of the British pension fund industry, also in many other countries with a big private pension fund industry. So the kind of questions that people are asking, which I think are really stimulating change, is really simple things. You know, how have you, as my fiduciaries, evaluated, measured, and are beginning to manage the climate-related risk in the portfolio that you hold on my behalf? What allocations have you made to low-carbon industries? What risk management is underway through either divesting from high-carbon sectors or through really meaningful engagement strategies with the boards of companies that you hold in the equity component of the portfolio? But you know, these questions apply across all sorts of asset classes. And finally, what are you doing as a pension fund to engage in the policy process? Because ultimately, we need those top-down initiatives that I referred to at the beginning. And pension funds, insurance companies, other financial institutions have a really important role to play in encouraging the right policy response that actually then helps them to make this decarbonisation journey. So I just want to get across that there's actually something quite lively happening from below, as well as these very important initiatives like the Dubai Declaration that we've heard today, which are more kind of top-down initiatives. And actually next week in Parliament in the UK, we have a gathering, we're calling it the Pension Power Parliament. And we've got members of Parliament who themselves have a pension fund that's actually still very high carbon, along with constituents and members of the public who are part of this movement to call for change in the pensions industry and to bring the voice of citizens and citizen investors to this incredibly important journey where time, as we know, is absolutely of the essence. So I'll leave it there. There's sort of more things to say, but I think that's hopefully a good introduction into the role that you know, the bottom-up, citizen-led piece of this equation.
Yeah, and I think that would be interesting to hear actually all of your thoughts about the end investor demand for this type of low-carbon solution or clean energy solution. But maybe as a first question, I would like to come back to your coal divestment. So obviously there was this political noise around this decision, but it was mainly advertised as energy, like carbon transition risk management, I would say. So I have two questions. Did it impact your performances, first? And second, do you see any other tangible carbon transition risk out there that you are particularly focusing on?
Okay. On the first question, so did it affect performance? I would say no, and if even positive, and for two reasons. One, even though this investment or disinvestment was significant, 500 million euro, concerned equity and debt, it is only a small part of the balance sheet, which is 500 billion euro. So that's why the impact was small. And second, what was remarkable, and which I must say we felt very proud, is many others followed, and not just insurance sector, but actually other pension funds and sovereign wealth funds. The first one to follow was, I think, the Norwegian state fund that disinvested 10 times as much as we did. So it set in motion a movement, and it felt as if the world had been waiting for somebody who just does the first step, and others would follow. So indeed, the market has turned very much in this direction, and therefore, with hindsight, it was also a very positive investment decision. So this is the answer to the first question. The other second question is, what else do we see? I mean, in the meantime, we have invested from tobacco, but this is not for carbon reasons. That is not the problem of cigarettes. They're bad for the planet, but they're bad very much actually for people, so this is more from health insurance side. We don't see anything that imposes itself. The real issue is, in my view, that we have to look at the whole economy and see whether carbonization or decarbonization strategies are impacting. In other words, we will only fulfill the COP21 1.5 to 2 degree commitments if we fundamentally change the whole way in which we produce and consume and transport goods and services. So this means it's not just the coal industry, it's the energy, the utility, the heavy industry, the light industry, the chemical industry, and so on and so forth, transportation industry. And we have to see in each of these industries, how does a decarbonization portfolio look like, and how can we accompany the change that is happening in these industries. And this is where we have come back to the issue of much better investor information about what's happening in the transition in all these sectors. So it's no longer about something at the margin or something in one sector. It is something about a movement in the entire way that we produce goods and services.
And Carsten, maybe you want to reflect upon specific sub-industry or sectors that would be at risk?
No, I don't think it's prudent to single out any specific sector. What I am thinking very much about and what I'm confronted with is to convey the message of the trajectory that we have in front of us, meaning net zero carbon in the second half of the century, to translate this to portfolio managers who do actually the investment decisions on a daily basis, and what does it mean for them, for their assessment of expected performance of assets, of investments. And in that respect, to find ways how to capture regulation changes, how to capture technology shifts, and how to capture demand pattern changes. So I think this is really the big nut to crack right now. So to translate what we see on a macro level to the micro investment level. And that's, as far as I can see, what the industry is currently grappling with, because it's not that easy to do. Maybe because of time horizons, climate, of course, more long term. But we will have to get our heads around how to make it tangible, how to make it easy to access. And in that respect, to your first question, and investor demand, maybe it's different in different markets, but broadly said, there's a limited target group of people who actually look for green solutions. But maybe it's an educational thing that we have to take care of.
So maybe to come back on, so your institution took the decision to divest from coal because it made sense financially speaking. Catherine, what's your take on, because you're also looking to have a positive impact on the entire economic chain. So would you advocate rather engaging companies to become cleaner, or do you sometimes advocate divestment? And when you talk to your, so the pension funds that you advise, my guess is that they're really worried about the impact it can have on their performances. And do you have a say on that?
Well, first of all, I just think it's worth picking up on the example of the Norwegian sovereign wealth fund, known as the Global Pension Fund, as a very kind of prominent example of coal divestment, 10 times the size, I hadn't realized that, of AXA, because that is a very interesting example of something that emerged out of this bottom-up energy. I mean, there's been a very dynamic and ultimately very successful grassroots campaign by Norwegian citizens to push for that. And then when it happened, it became extremely influential all over the world. So it's a nice case study of the value add of this grassroots energy in this process of transition in finance that we're talking about here. When it comes to coal, Share Action has said that we think it makes quite good sense to divest, because quite honestly, it is hard to see how the coal industry is going to prosper if we are in any way serious about what we committed ourselves to in Paris. With oil and gas, I think that it's actually this is a sector also which faces very, very serious structural challenge from the agreement that we've struck in Paris and from other things that are flowing out of that. That doesn't mean that there are parts of the oil and gas sector that can't be very profitable. They will be. We still need oil and gas, clearly, dominant part of the energy system. But you know, if you think about the coal situation, the smart guys got out of coal much before Norway, AXA, or anyone else, with respect, in terms of, you know, financial smart move. And I do think that kind of early action is needed. But in the meantime, we need pretty tough engagement strategies. And I have to say, I think a lot of what we're seeing in the engagement space is a bit soft and cuddly relative to what's honestly needed. And one of the things we're trying to look at is, you know, in the end, if you really engage with a board and you don't think they're seeing the structural challenge that faces their industry, and you don't think they're managing risk well on your behalf, then after a period of engagement, you need to divest. You've got to have confidence in management. And I think this issue is one that's very challenging for management in the oil and gas sector. Many of our pension funds remain extremely highly invested in that sector. It's a key sector, but, you know, the winners are going to be in places like the UAE that have cheap energy relatively that they can get out of the ground. And there's going to be, you know, things like frontier, high cost projects. BP 2 weeks ago cancelled its drilling plans in the Great Australian Bight, which is an area off the South Australian coast with, you know, pretty inhospitable conditions for an oil company, very, very expensive. Those kind of projects don't have a good economic future anymore, and we're beginning to see kind of reality bite in terms of the, I think, correct decisions being made in the oil and gas sector. So there's some thoughts on that.
So we will come back on this BP.
Just if you want to build on this, I think it's very important what Catherine just said. Once you move beyond coal, it's less evident. Coal is a very well-defined sector. We all know the negative climate distribution. Once you move beyond that, there's much more diversity among the corporations. So you need to understand better what the corporations are doing, what their strategies are. There's some of the energy, oil and gas companies that are highly diversified, that move into alternative, that move into renewables, and others that don't. So here we need much better information for investors in order to be able to distinguish between different kinds of companies.
And so outside of coal, I think this. So I would like to come back to this BP cancellation and maybe what happened to Exxon a few weeks ago about their reporting on their reserves. But before that, so Pete, so your target is to be carbon neutral. So you have, on the one hand, a carbon footprint, on the other hand, carbon avoided emissions. Could you maybe explain to everyone how does that work? And do you think it's where do you think this methodology is in terms of?
Yeah, it's of course the idea is quite simple, that you have a carbon loss on one side and a carbon profit on the other side, which is mostly avoided emissions, and it's only a tool to help you define your role in helping to achieve the 2 degrees or 1.5 degrees goal we have all set. The methodology is you can find it on our website. It's actually quite simple. For example, if you the basic principle is if you invest in a company, say you invest 5% in a company, you know the annual carbon emissions of this company, then you calculate 5% of these carbon emissions to your carbon footprint. If you have a wind farm and you invest 10% in the wind farm, then 10% of the avoided emissions is on the side of your carbon profit. There's of course all kinds of complexities below that when you go into detail, but they are all solvable, and they don't have you don't have to have 100% assurance of the correctness of the methodology. It's just a tool to see how far you should go as a financial institution. There's one important thing I would like to add to that. There's a difference between your role as a financial institution in helping to achieve the 2 degrees goal on one hand, and the risk you have in on carbon intensity on the other hand. The other hand, the other side, carbon risk, is on the level of the financial institution itself, while the 2 degrees is on the risk for the world as a whole. And these are not comparable things. So yes, if you want to have your role as a bank in achieving a 2 degrees role, you will have to sometimes to disinvest from investments that are profitable, or even invest in projects that are not meeting the profit goals you have. And that's all because, and that's we all know, because it has been said already today, not all the costs that are adhering to carbon emissions are internalized into the economy. There's a very low carbon price. It's much too low to achieve a profitable way forward in investing towards a carbon neutral world, so to say. So yes, it's important to see for your carbon risk as a financial institution, but it will not, if every individual financial institution would look in diminishing its carbon risks, that would not solve the climate problem of the world. That asks for a much further step. And that further step, that's what we were looking for with adhering to our long-term goal to become carbon neutral in 2030.
So I guess to neutralize your carbon footprint, you need green assets. And so I had a question to Christian and all of you. So you were complaining about the fact that it was difficult for your institution to meet your green financing commitments. I guess for ASN Bank, which is maybe a bit smaller entity, you don't have the same kind of difficulties. Where do you see this market for green assets going? We can think about green bonds. Do you think it's a good solution to promote avoided emissions? Or do you think we need more new regulation, or actually less regulation for insurers on green long-term assets?
I mean, on the bond market, we have the issue that there's, since a year or so, one new investor out there who has come from nothing and is one of the biggest investors, and that's the central bank. So the central bank buying bonds at huge scale. They're establishing an insurance balance sheet which has a lot of government bonds and corporate bonds, so there are no more yields. Long-term capital markets rate are zero in many European markets. So the real interest for us would be to get some return to invest in green infrastructure. Now, in order to do so for a long-term investor, there are 3 conditions that need to be met, and it's often difficult to get these 3 conditions. The first one is that projects must be viable. If you put your money into an illiquid 20-year project, you must have a project that has an economic meaning. Otherwise, the next electoral cycle, your project will be dead. And we know by experience there have been some projects that have died. So economic viability is the first condition. The second condition, it must provide some sort of ideally predictable and stable cash flow. One has liabilities to cover, one has insured people one needs to cover, so one needs legitimately to ask for some sort of return, and not all sort of infrastructure projects do provide you some return. And the third condition is often the most complicated one, and that's where the governments come in. You need sort of a regulatory stability. Because again, you put your money into liquid assets, and then it depends very much on how these assets are managed and whether regulation changes. So in order to take, it depends a lot on what the electricity prices are, it depends on a lot on what opportunity costs are. So you can put your money in and then the regulatory environment changes and your project either becomes much more valuable or much less valuable. So if governments want to induce investors into infrastructure projects, they need to think about a way to provide regulatory stability. Otherwise, private investors will always be hesitating. So these are the 3 conditions, and we continuously look out and are very eager to invest in projects and do take risk. I mean, either debt risk or equity risk in projects. Large investors have teams that are assessing infrastructure projects, and the question is, do we get these 3 conditions right?
Catherine, you wanted to say a word?
Well, I just want to comment on this. I think investors have concentrated a lot on high carbon industries, very understandably, in terms of thinking about climate risk and carbon risk. But I'm struck post-Paris by this, and actually pre-Paris as well, by this kind of fairly consistent flow of commentary from the investment community, which is we just don't see the investment opportunities, people aren't bringing them to us. And I think there's a really, really big opportunity for the banking sector here. Like, we need the boards of the major mainstream publicly listed banks in the world to be a lot more ambitious about bringing deals to market and using all the skills that they have to satisfy this demand. I mean, asset owners all over the place are looking for yield. There's this huge unmet need to find, the trillions that are needed to create this transition, and we do need a bit more, just entrepreneurial permission given inside the banking sector, I think, to and we've seen it with green bonds. Green bonds is a big success story, but we need the next generation of innovation. And I think that's where you've got transition opportunity, and not just for green sectors, for sectors like banking that have a completely important sort of systemic role to play in the financial services. That seems to me something really important for UNEP-FI to engage as many members in the banking sector about. So that's just and I really do think investors will follow if those opportunities are presented.
Pete, working for a bank, you may want to say something about this entrepreneurial spirit coming from the banking sector and the limits to it because of regulations.
Especially today, it's quite difficult when you want to be a really entrepreneurial bank due to all kinds of restrictions. But nevertheless, I do take up the challenge. That's also why we set this goal. As we set this goal, well, that's what society needs. That's what climate globally needs. But we don't know how to achieve it. But that's all in the game. So we start working on it. And one of the things we are looking at now is not only the focus on renewable energy and wind projects and solar projects, but also focus on, for example, mortgages. We have a large amount of mortgages in our portfolio, and it's less interesting to look at mortgages in relation to climate change. But we decided that we want to help our clients that have that hold a mortgage at our bank, how we can help them isolate their homes more and decrease the energy bills, etc., etc. So it's a totally other perspective than you normally have as a bank in relation to the climate, which is that divest from fossil and invest in sustainable energy. But there's so much more to do in relation to energy efficiency. So I'm now talking about mortgages, but you can also talk about SMEs and companies and all kinds of energy efficiency projects. There's a huge world to win in that side.
Okay, we will open the floor for questions very shortly. Maybe one last one while you are reflecting upon the questions you may want to ask. We talked about BP, and maybe they could have disclosed better the risk that we're facing with regard to this project. Exxon is currently under probation on disclosure issues. I know for a fact that Christian and Karsten have been looking upon these issues quite hardly. Could you maybe tell us what are your thoughts about what kind of disclosure we want from investee company, from a projects company, to better manage carbon transition risk, and how to implement it or to require this disclosure? Does it need to come from regulation, from bottom-up initiatives?
That's a great question, because that's indeed where the debate is at present. And I would say what we need is forward-looking information of all firms on their path towards a decarbonized future. And so this is not now about individual sectors, this is about literally everybody. This is about the heavy industry, the light industry, the transportation, the chemicals. For everybody, you'd like to know are you in line with its strategy towards a decarbonized world or not? And this is exactly where the Bloomberg task force is coming in, because the philosophy of this task is to say, investors, if they want to distinguish between in line and not in line, need to have information. And so the way to provide information is along 4 categories. That's at least this proposal by the task force, and we are just finalizing a report that will be published in early December for public consultation. And the first question would be to suggest to firms, these are all voluntary recommendations, to recommend that firms first say how they are governed about climate risks. What's the role of the board? What's the role of management? How do they get informed about this? So of the 4 pillars, we suggest the first one will be governance. How are you organized around climate risk in your company? The second of the 4 pillars will be around strategy, because we need forward-looking information. If you have the footprint today, it's a picture that's useful, but ideally would like to see the film going forward. So that's why the second pillar, strategy. We suggest that the firms say how climate risks and the decarbonization strategy are taken into account in their company strategy going forward, in their financial plan. Is it in there? What is it over the short, medium, and long term? How are they adjusted? The third question and third recommendation will be on the risk management. How is this risk completely managed in your company? Where is it managed, and what resources do you have, and so on? And the fourth is the one which is most tricky, if you like. It is about targets and metrics and scenarios. So we would recommend to firms to tell us whether they have given themselves any decarbonization targets going forward, whether they have used scenario analysis to see whether they're in line, and what are the internal metrics with which they're forward. So the whole aim of the Bloomberg task force, which is working for the FSB, is to mainstream climate into financial decisions. And this would mean that if we are successful in a couple of years down the road, you would find in every annual report over the G20 countries and the world a section on climate risk, which says how the company deals with climate risk, is organized in their strategy and so forth. And this would be then the possibility for the portfolio manager that Carsten mentioned to be able to say and take into account of this risk in the usual investment decision. So it would not be an add-on, it would be a built-in. And this is what we said this morning. One of the goals of sustainable finance, UNEP-FI, would be to make sure that environmental and other decisions are part and parcel of each and every financial investment decision.
Catherine, do you think with governance, a strategy, risk management, then target metrics and scenarios, do you think we cover all the sort of information companies should disclose?
Listen, I think it's a fantastic framework. I'm very excited about the work of the Bloomberg Task Force, and I know that there's a number of people here at the conference that are involved. I think it's going to give us a framework which kind of, in a sense, creates no excuses anymore for companies, but crucially, no excuses anymore for banks that provide finance to those companies, no excuses anymore for investors, long-term and investors in those companies, not to have some clarity around how exposed are we to this climate risk, and how engaged are we with the opportunity of transition. I mean, it's a really serious upside opportunity, and we need people to make money on this, otherwise we're doomed. So, you know, we want people to be greedy about this transition, and I think that the framework gives us the work of the task force is very, very promising. But it is going to need people. It's voluntary, as Christian's saying, and so it's going to need everyone in this ecosystem that we're all a part of to engage with it, champion it, develop it, use it. And personally, at Share Action, anyway, we're very committed to trying to make a big success of it.
And so, voluntary. Let's maybe hear a few words about mandatory. We have seen some regulation. Christian mentioned one that was actually quite interesting, Article 173, first of a kind. Carsten, you've worked with the UNEP-FI on these regulations. Could you tell us a few words about that?
Yeah, we started looking into that, what role actually financial regulation can play to mobilize the investment industry as an agent for emission reduction across the real economy. So in that respect, looking at what do we have? We have a number of investor-led initiatives that are just, they are nice to have, but actually looking at mainstreaming, see that every investor actually is doing the same. So we are quite far away from that target. So just one or two examples. Disclosure efforts are remaining patchy. Emission reduction goals are not really widespread. Just to name two. And the idea looking into that is, okay, could regulation embrace and actually accelerate these efforts? And with that respect, we recognize, and by analysis, that standards started to shift. So regulatory measures or preliminary regulatory measures come up more and more frequently. So in particular, the task force is very influential on that. We have seen regulation already in some markets. But for the financial sector, it's about, okay, what are the requirements? Is it going to be voluntary in the first place, according to your question? Maybe in the first place it needs to be voluntary. Maybe it shifts over time when you made some experiences, how to handle this, because it's largely uncharted territory. How to do it, nobody really knows just now. ASM just tries its own approach. We have to find standards in that respect just to be able to compare. So we will see maybe de minimis rules for very small market participants. But what is very important maybe is to get at least some guidance in terms of how to embrace these requirements. And in that respect, regulators working together with investors could be a very fruitful exercise in order to maybe develop a mutual interpretative guidance that, of course, has to stay cost conscious. And secondly, apart from just measuring, it's about managing the transition, and the regulators providing industry-wide goals and a more inclusive transition planning does not only help the real economy, but it helps decision-making by investors as well. And so in that respect, we will have to agree at some point in time with respect to impact metrics. So in that respect, bottom line is to make the investment industry more resilient. So I think regulation will have to play its part, even though it's maybe voluntary in the first place. But I wouldn't be very surprised if at some point a standard will develop and then maybe hard-coded. But then everyone is prepared.
Yeah. And may I add something to that?
Of course.
I'm very in favor of voluntary measures and, for example, developing methodologies for carbon footprinting, etc., etc. But time is very pressing. And every year, what science shows us is that the 2 degrees goal is getting out of reach. Even all the Paris commitments doesn't bring us the 2 degrees goal. Even if we already know that 2 degrees is too much, it should be 1.5. We are very far away. What I fear is that my favorite instrument, voluntary instruments, will not help us out of this global problem. So eventually, you will have to, and probably within 10 years at least, you will have to have regulation. And what kind of regulation? I don't have a preference, a CO2 price, perfect, or a cap for different sectors on CO2 emissions, perfect. But the time factor is not in favor of voluntary measures at this moment. And I think we are going to see this, and that's, by the way, that will increase the risks for financial institutions on high carbon intensive investments. Because if regulation is coming and you still have a lot of high carbon intensive investments on your balance sheet, you have a substantial risk.
Thank you very much. And we see, of course, regulation spurring in different countries. So, of course, emerging market in China, and this might set some examples for other countries. We have 10 minutes left for this panel. I would like to open the floor for 5 minutes, actually. Lisa is showing me 5. But so we have time to take a couple of questions. Anyone in the audience would be interested? Nick, over there.
Very good panel, Nick Robbins from the European Inquiry, real insights. I just wondered, what are, among the things that haven't been discussed, particularly getting beyond disclosure, what are the really tough issues that we should be thinking about in the next few years? Thank you.
Toughest what? The toughest what? Sorry.
Nick, so beyond disclosure?
Beyond disclosure, which I think we're getting more comfortable with, what would be the tough problems you see that we need to really grapple with in terms of dealing with climate?
Christian, you want to start?
I would see 2 issues. I mean, I think what we're doing the last couple of years of greening the financial system is great and necessary, but fundamentally the functioning of the system is still sort of the same. We have not yet talked about the very difficult technical issues of capital charges, investment horizons, leverage ratios, liquidity ratios. I mean, the whole regulatory framework is sort of, as always, done looking backward at the 2008 crisis. It's not looking forward at the 2050 climate crisis. So that's one. 2, I always am struck that when we talk about sustainability the whole day, and then we switch on the evening news and look at the stock index and get the news, it's not the sustainability index. Then we get the paper the next morning, it's not the sustainability index. Then we get our pension sheet or investment sheet of our own fund, it's not the sustainability index. So at some point, if we really want to move further, we have to really force the system to change metrics. And we cannot say we all do the Dow Jones Sustainability Index, but in the evening news, the newspaper, and our own investment assessment, we look at the non-sustainability assessment. So at some point, one has to think about mechanisms. I don't know if we want to make the world to move to measuring, I don't know if that's a good paradigm, but in meters rather than inches, we have to destroy the mechanism that measures in inches. I don't know if this is too wild. But at some point, I feel the debate will come, and if we have to move the system, we really have to move the system, and that's a big call.
So would you advocate lower regulatory charges for green investment?
Well, we have to admit, the moderator and myself come from a country which is France, which is very, very good at regulation and taxation, and sort of, and it's now spearheading the world on this. I must say, if I look at our work in the Bloomberg Task Force that you will see in a very few weeks, it's not evident. There's a lot of complexity in there. If you really ask what should a chemical firm disclose to show whether it's in line or not with the COP21 targets, there's a lot of difficult things there. Is it CO2, greenhouse gas emissions, water usage, investment in new technologies and so on? So my sense, it's very difficult to be casting this into regulation. So I'd have a preference that we try and test it in a market voluntary framework, see the take-up ratios, and get to learn to know these metrics before we cast this into regulation.
Thank you, Christian. We have one question from the audience.
Yes, Karl Brockmann from KfW Bank in Germany. We are often accused for still financing coal-fired power plants under certain conditions. But bringing together the insurances and ASN Bank, wouldn't it be a real consequence to balance the insurance side and the investment side of AXA and Allianz as well? So you have some projects insured, and these are financed emissions as for a bank. No? It's the same game. And so my question would be, are you still engaged in coal finance or other CO2 projects on the insurance side?
You want to go first?
I can answer to that. Actually, this is a debate that is we have internally. And Christian, you announced
we
that
also have it internally.
You have it as well. So it's not that easy because you tend to have insurance portfolios that don't tend to be single-site insurance programs. And that makes it really tricky. You can imagine what discussions you tend to have with clients in that respect. So we try to find a way, but we are not yet there.
But if I can add, I think the discussion, at least as far as I can see, is moving. For example, tobacco, we said no more new mandates. So I think one has to get assets and liabilities coherent again. So the discussion that I would see is saying, yes, let's move to this world. Indeed, there are plenty of other companies to insure, and let's get consistency. So the debate is clearly moving to this direction.
So we have to see that the insurance industry maybe is on the liabilities side a few years behind what we have seen with the with maybe the introduction of the principles for responsible investment, actually. Now, so PSI came, I don't know how many years later. So we have to do these discussions now. But I completely agree with Christian. So we will have to get our heads around that.
Okay. So to be continued, thank you very much. Thank you our four panelists, Catherine, Pete, Karsten, Christian, and of course UNEP FI and the sponsor of the event. Thank you, everyone.
Thanks so much.